Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now guys, look at this daily chart here and look at this candle. That's a very interesting candle. Inverted hammer candle, got a nice long wick showing selling pressure, alright? During the day, in the morning, the bulls, they were doing their thing, taking out Uncle's resistant levels and pushing up as high as 387.58, but then you had a nice reversal back to the downside. All right, so we're gonna talk about signs of when we know this bear market rally could be over. All right, let's go. Now guys, before I get to the daily chart, I want to talk about Uncle's trading methods. Okay, now as you guys know, if you guys been watching me for a while, you know I trade based on support and resistance levels, and I use the 15-minute time frame to execute my trades. Okay, I look for calls when a resistant level break out, or if it get a false breakdown setup, meaning it breaks down a support level and then recaptures that support level. Okay, I look for puts when a support level fails, or if we get a false breakout setup when it breaks above a resistant level but then fails to hold on the back test and break back below that resistant level. Okay, so you can see here, market started off breaking out above that 382 level, okay, because it opened here below 382. All right, it opened at 381.62. It break out. Okay, now this happened pretty fast. All right, so usually I say you look for calls when a resistance level clears or it breaks out. Okay, so this happened pretty fast, but if you miss one setup, you just hop on to the next setup. Look at that, we got a close above on the 15-minute chart on my next level at 384. This triggered a move and it broke past my 386 level on the 15-minute chart, which triggered a move to my 387.5 to 388 zone. Okay, this was all covered in my Discord. All right, now like I always say, we don't need to call tops. We don't need to call bottoms. All we need to do is wait for the right setup. So look at here. This candle right here, the 1230 candle on the 15-minute chart, we got to close below the 386 level. We cleared it here at 11 o'clock. We closed back below it. When it had a chance to back test as a support to confirm more upside, it failed to hold. Boom. And look at that. Triggered some move to the downside. This is an example of a false breakout setup. Okay, guys? Now, we take the principle that we see on the 15-minute chart, right? That I'm talking about on the 15-minute chart. It can be applied on the daily chart as well, okay? The only difference is the time frame, all right? Obviously, on the daily chart, it takes longer to play out, okay? So, with that being said, remember, we cleared that 380 level on Tuesday. Today, we had an intraday reversal, all right? I don't think Meta did pretty good. Look at Meta. Holy moly, Meta dropped. All right. I don't think they did good on the earnings. That might be, I'm not saying it will happen, but it could be a catalyst to help push the price down. I don't know. But we still need to let the price action confirm the bias. All right. I'm not saying I'm biased. I'm just saying we need the price action to confirm the move. With that being said, here is the bear case scenario. The same as the other days. SPY needs to take out the 380 support level, all right? We cleared it on Tuesday. If we can break back below 380, that's a false breakout setup, guys, all right? The same false breakout setup I'm showing you intraday on the 15-minute chart, it can be applied. The principle can be applied on the daily chart. So below 380, that could be a sign the bear market rally could be over, okay? I'm not trying to call a top. I'm just saying, usually when bear market rallies are over, it starts with a false breakout setup. Not every false breakout leads to a big move, but every big move started with a false breakout or a false breakdown setup. Okay? So 380 fails. The next critical support I would be watching is 375.5. That's the trend line of this multi-month trend line from August. Okay? We broke out of that back on Monday. So if we break below 375.5, that's a false breakout setup based on that trend line and would put the multi-year trend line, which is at 371.2-ish now, in play. Below 371.2-ish, that's another false breakout setup based on the daily chart. That's bearish and would trigger more downside with the next big target I'll be watching is 367.84. That's the 23.6 retracement level, okay? From August high down to October 13th low. All right? So I'm not giving out predictions. These are just trade setups, price action setups or price action triggers that I want you guys to watch so you can make your move accordingly. All right? You can look to play that move, short the breakdown, or if you're bullish, you'll at least know where to cut your loss. All right? Now, the bull case scenario is on any pullback, that 380 level must hold. As long as it holds, this breakout from Tuesday holds. All right? The lowest that needs to hold is this trend line that's now at 375.5. Okay? To avoid those those false breakout setups. But as long as 380 holds, bull has a chance. The bulls have a chance for more upside. It doesn't mean it's going to go straight up right away. The market doesn't go straight up right away. Sometimes it entered one directional move trend days, like it's been giving us pretty much this whole week. Or it can enter the chop phase where it can just, chop in a range, sideways chopping. It can come in a bull flag, a pennant, in those forms. Okay? Just to build strength for the next move, for the next one directional move. Okay? From one directional move phase, from trend phase to chop phase. That's possible. All right? So as long as 380 holds, the bulls have a chance for more upside. Okay? 382, 384, 380. Well, I was watching 386, but the 50 DMA daily moving average is at 385. So definitely watching that 50 daily moving average, which is at 385. Above that, if it can clear, let's see if it can go break 387.5, which was today's high, and then see if we can test 390, the 50% retracement level, okay? But that bull case will only be in play as long as 380 holds. Bear case scenario, or the bears take back control below 380. Okay, guys? These aren't predictions, just price action, unbiased technical analysis. The bull case scenario and the bear case scenario. I do this every single video. All right? And we're going to move on to triple Q. Look at that. Triple Q inverted hammer candle. This is a red one. Okay? It dropped below that 279.5 level that I had. That's the gap fill level from October 6th. Okay? So as long as below 279.5 277 is the next support. 275.5 just pivot highs. Right here, pivot high right here back on last Friday actually, okay? 275.5, and then the 23.6 retracement level at 273. Below 273, I favor this relief rally that we've had since mid-October. I favor it being over, okay? So bulls need to defend 273 on any pullback, all right? But to be more bullish, I need to see it recapture some resistant levels or clear some resistant levels, starting with 279.5, 283, and that 284.8-ish level. We got close to testing it twice, but that is the 38.2 retracing level. I'd be more bullish if that clears. Right now, as long as, like I said, as long as below 279.5, it's looking pretty bearish. You can see more downside, because keep in mind, that is a false breakout setup right there, okay? False breakout setup from this gap fill from early October. We cleared it yesterday. We broke back below it today. That's a false breakout setup. So it needs to recapture 279.5 to look bullish, because as of right now, that's a false breakout setup, okay? And look at Meta. It's still dropping. Holy moly. All right, let's see. Tesla. I cover Meta in the Discord, by the way, guys. But look at Tesla. All right, this blue trend line came from a viewer. Shout out to the viewer. All right, it came from a viewer that mentioned, and I added it to my chart because I thought and agreed with them that that was a good trend line. And look at that, almost back tested as a resistance, very close to it. Okay, so is that 223.7? So supports at 222, and this critical level at 218.5. All right, we cleared that level on Tuesday, and it showed some follow through today. So if we lose that level, that's bearish. We lose that 213 level. That's very bearish. Okay? But as long as 218.5 holds, I want to see the 225 level get taken out, as well as the 230 level. Got pretty close to taking it out today, but only tested it and got a hot slow rejection instead. And of course, that blue trend line is at 231.5-ish now. So a recapture of that level would be pretty bullish for Tesla, okay? But keep that 218.5 level in mind. If that fails, false breakout setup on Tesla, okay? All right, so let's end this with the option flow. Filter for 500K premiums or above, 70% into puts. All right, guys, 70%. Big money is still bearish on the S&P 500. QQQ, 78% in the puts as well. So big money is bearish on that. And of course, ended with Tesla, 58% for calls. Okay, so big money is overall bullish on Tesla. That's very interesting. All right, guys. So if you guys want more content from Uncle Charters or need the extra edge to your trading, your trading strategy and stuff with Uncle's help, please consider joining my Discord, or you can subscribe to my Substack. It will be great. I'll be grateful if you did. All right. Thank you, guys. Peace.